Hello, everybody. Welcome back to the Prospero.ai stock market live streams. There was a lot of headlines that came out over the weekend that we will have to get into on the stream today. Be sure to like the stream if you're dropping in now. Good to see that we've had some people in the chat already. We had Mario saying hello. We have JC saying good morning and NW as well. The usual suspects rolling on in. Good to see you guys. We have a lot of great topics to get into today. Let me double check our Twitter stream situation. As you guys know, the ongoing battle. Oh, it looks like we are working though. I guess it's back in business as usual there. So good to see that. All right, let's run through some of the topics here. We will also check in on the QQQ, SPY, and other net option sentiment levels. Guys, I feel like everybody, after seeing the stuff that was going on over the weekend, was expecting panic, disarray, a huge pullback. We got a little bit of it this morning, but the market is hanging in there. QQQ is now down just 1/3% today, so nothing crazy in terms of moves there. The Russell is actually in the green at the moment, so really wild to see how strong the market has been and maintains. And I'm going to ask George about that as well. Just the lack of wanting to pull back in the markets, despite everything that it seems to be working against it. By the way, if you guys follow us on Twitter, we did alert the whole community that the SPY and QQQ net option sentiment had both pulled back to zero, which the SPY has been there, but the QQQ had been at about 4 or 3 low single digits, and it was pulling back to zero last week. So we sent out a tweet and alerted everybody, and it looks like the signals were picking up something. And obviously with the headlines over the weekend and the tensions between the USA, Iran, and really the globe coming to a maximum point. But let's go through our new tickers that we look at, the XLI and XLK. So we have the XLI at 43 in net option sentiment. So actually in the bull zone above that 40 level. XLK is at 11, QQQ at 4, and SPY at 0. So some very different levels there. Like I said, the markets are actually mixed now, which is crazy, with the Russell being in the green and going actually greener. It's up almost 1/4% now. The Dow, the SPY, and the QQQ all down about the same, about 1/3% at the moment. We are going to talk about the global tensions a lot in the beginning of the stream today. Try to highlight some of the most interesting aspects of it, like the implications it has for the energy sector, the travel sector, maybe if it will reignite some inflation concerns, just how we can position from it, if we have seen the max pain from it. It was kind of an instant buy the dip this morning with everything that had been selling off in the pre-markets. So yeah, interesting stuff going on there. We're seeing European natural gas prices surging over 50%. A lot of different things moving bigly from it. So we will dive into all of it. We will also be covering Anthropic, which has been getting a lot of attention on the streams as of late. George was highlighting it as being the #1 like LLM service or AI service as of recently, and it's crazy how it's just been popping up into the zeitgeist now, with the big news of them becoming a supply chain risk, quote unquote, actually determined that by the USA government, losing their DOW contracts and surging to #1 in the App Store. So it was quite a week for them. A lot to discuss there. Also, the contracts that they had lost from the government were scooped up by OpenAI almost instantly. So what does that say about both companies and what are the what are the ongoing effects of this whole situation? It's very fascinating to see how quickly the business world, news world moves these days. Then I want to highlight the semiconductor space. We saw Nvidia react well to earnings instantly last week, but just as quickly as it went up, it went down and it sold off the earnings super fast. JC said, "Look at George moving markets again." Yeah, George, he has a knack for putting his finger on something right before it gets the attention of the public. So we've seen it time and time again. And if you're watching these streams, there's no shortage of examples of things we talk about, and then soon enough they become important, and it seems like other people pay attention to them too. But yeah, it's really cool. George has been really talking about Claude a lot recently, so it's fascinating stuff there. We'll see if Claude and the app and the interest in it, energy behind it, downloads for it can maintain, or if this is going to be like a little pop with all of the headlines that we're getting. But yeah, crazy stuff going on there. Um, let's look at NVIDIA today. NVIDIA is currently in the green, up 2% at $180 per share. I want to ask George about the overall semiconductor space, because from what I've read and seen, semiconductors are a super cyclical sector, and they've had such a good run for so long. It almost feels like they're due for a cool down period. Now, whether is that a week, a month, a quarter, longer, we will ask George. But I know he was short AMD, and AMD looked terrible in our signals. Now you have NVIDIA reporting pretty good earnings and can't even hold the earnings move. So is this all a sign that semiconductors are not where investors want to be at the moment? Even Broadcom has kind of hit its highs and trended sideways. The only one that's been super bullish as of late is Micron MU, which is still near all-time highs, even with everything going on. So yeah, we'll dive into the semiconductor space and if it is an interesting buy at the moment in the first trading day of March 2026, which is unbelievable, by the way, everybody. Can you believe it's already March? January and February already behind us. We're in the last month of Q1 2026. Time is flying. It's crazy. I also want to bring up CoreWeave on the stream, which gave a statistic in one of their investor relations of how they have $67 billion backlog of revenue. So it's crazy how a company that wasn't even public and was like a tiny neo cloud company just a few years ago now has so much demand, so much business that they can't even keep up with it. And they have a $67 billion backlog. Now, they said they expect to convert about 40% of this within 2 years and up to 80% within 4 years. But as we've discussed on the streams, with the circular nature of AI, the concerns of spending, now we're having these geopolitical tensions pop up. Will this spending ever actually truly be fulfilled? Can we have any confidence in it? These are the questions, and we'll ask George them when he gets here. Two more topics to go through today. By the way, let me do one last look in our Discord, which is linked below in our YouTube description of the live stream. So if you're watching on Twitter, head over to YouTube, subscribe, and then join the Discord if you haven't yet. We have a weekly live stream topics section. I didn't see any new ones. I still don't now. So we will have no weekly Discord questions as of yet, but don't worry, everybody. If you do have a question, you can always comment them in the live stream chat. We're happy to answer whatever you guys got for us. So just get your comments ready in the chat and we will get to them as well. NW said, so many Saturdays left in the year and the admin loves to make moves when the markets are closed. Yeah, it seems like all these major headlines are coming out like in the early hours. I think the Trump conference originally of this whole Iran situation was like 3 a.m. So yeah, they like to move in the darkness, see if the markets can digest everything before they reopen on Mondays. And honestly, I mean, it looks like it's working, that strategy today, with how little the markets are down at the moment, and continuing higher, by the way. The Russell is now up about half a percent today. The VIX also is trending lower throughout the day. It's still at elevated levels, over $21 for the VIX, but coming down off of its highs. I saw some people posting about how in the pre-market, Lockheed Martin was up like 20%. Well, let's actually check in where they are now. That's one of the things we'll discuss, the defense sector, when we go over the whole Iran situation in the beginning when George gets in. Defense, Palantir, drones. Yeah, just a straight sell-off though for Lockheed Martin. I mean, it's still up 3%, but not quite the 20% that it was some people saw overnight. It's doing great year to date though, up 40%. So good stock to have in your portfolio. Where did I leave off on topics? We have, okay, reacting to Block. So Block reported earnings last week, and Block has been a pretty bad investment. It's similar to PayPal in terms of performance, but it went up bigly off this earnings report. But it wasn't mainly anything to do with the earnings themselves. It was the fact that the company is laying off about half of its workforce. And this has been an ongoing discussion in the streams as well. The AI effect on the job market. Now we're seeing it come to fruition, and the market is also reacting positively. I'm gonna ask George, Block had 10,000-ish employees before they made this news, and now they'll have about 6,000. There's some other companies that are a lot larger that do very similar terms of services where a lot of their products and services are online. And Block gave, like Jack Dorsey's tweet, he gave directly the reason was how AI is changing the way the company is working. Can we see companies with 50,000 employees, 100,000 employees make similar style cuts? And what would that mean if just overnight a company is cutting 50K employees or even more? So we'll dive into that. The last topic I have for the stream today, if you guys know me, I like my sports. I wanted to relate this to sports. So I was thinking about the prime in sports versus the prime in investing. So, prime, probably what in sports you'd say like early 20s to like very early 30s. I guess it depends on the sport exactly, but it's really young. It's like, your early to late 20s is pretty much the prime of athleticism and performance in sports. I feel like investing it's super different, and it's contrary to a lot of other games, sports, even like chess, super young prime. It's like even younger than like a typical sport. It's like late teens, early 20s. Um, but investing, it seems like you can get better and better and better into your 40s, 50s. We have investors these days, the Ray Dalios. You saw Warren Buffett go till he was like 100. So, like, when is the exact prime age for investing? Uh, I feel like it's way later than a lot of the other, you know, endeavors in life. I don't know. You guys can weigh in on the chat. What do you think the prime is for investing, like in your opinion? I would have to say it's got to be like, I don't know why the like 50s pop into my head. I feel like you learn all these different things throughout your early career and even the middle of your career, and then you can finally implement them and have all of that knowledge, that wealth of knowledge that you've gained. So I don't know. I feel like the 50s is like maybe the prime. JC said investing values experience over decades. Totally agree. And W, yes, experience. How many mistakes you made? Yeah, it's the only way you learn in the stock market, right? You got to just stack up a bunch of mistakes and then learn over time. You got to learn the hard way. Try not to, but it seems like that's the way. That's the only way that people learn. Hey, Tom, a new name in the chat. Hello, Tom. Welcome to the stream. 68 and still learning and still making mistakes. I guess, right? We'll make mistakes as long as we go. But if we're still making mistakes, that just means we're still trying to get better. So good for you, Tom. Thanks for joining the chat today, too. I think as long as your thought process allows you to make the right moves, age doesn't matter. There you go. Totally agree. All right, let's take a look around the market here. George is on the road, so we will see what kind of streaming setup he's got for us today. But let's look at some of the stocks and how they're moving. We'll look at the Mag 7 here. We have Apple in the green. The almighty Apple has been super resilient year to date. It's actually down about 2.5, 2.75%, but I feel like Apple has been holding up so well and in the green here today. Amazon is in the red, Google's in the red, Meta, Microsoft in the green, Tesla now in the green, and we checked in on Nvidia before. They were in the green as well. So we're seeing mixed in the Magnificent Seven names. Let's check out our ASTS and LEU. How are they doing? ASTS is up over 5% here today, up 12% year to date. So a Prospero pick still hanging in there. LEU is up about 2% today, down about 16% year to date, but good to see it holding up today with everything that's going on. You know what I saw actually also, which I wanted to remember to jot down and ask George about, is the reverse moves we're seeing for like gold and silver and Bitcoin. So over the weekend and as the market opened, gold and silver both gapped up. Obviously, they're like hedges to what's going on in the world, but instantly sold off throughout the day. And then Bitcoin, the complete reversal, going down over the weekend and then gapping up throughout the day today, up to now 4%. So interesting at how quickly people are feeling okay, seemingly, about what's going on and feeling comfortable enough to buy the dip. Ooh, ASTS has earnings today. All right, so we'll be sure to bring them up in more detail before the end of the stream. We'll take a bigger look at them. Let me jot that down. Although, yeah, I guess that could move them a lot. So yeah, we'll take a look. Let's actually look at their signals right now while we're chatting about them. ASTS 94 upside, 90 growth, 89 net option sentiment. Still looking pretty good in the Prospero signals. It's one of those stocks that it has high signals everywhere. Even downside is creeping up now, though, a little bit. That might be a little bit concerning for George. And on the time series graph, it's kind of trending higher. But yeah, signals are looking pretty good. NW said they were supposed to launch at the end of February, but now moved to March. I was holding through launch, which now includes earnings. So that kind of added some risk to you, huh? Hello, George. Welcome to the stream today. Good to see you.
I finally have a good streaming road set up.
Yeah, I was about to say.
I'm
This
going
looks
to be on the
nice.
road for the next 3 weeks. I normally avoided road live streams, but yeah.
Well, thanks for making time for us. This is awesome, and there's a lot going on in the market, so the people need to hear your thoughts, George. We've already been chatting about it with a lot of the folks in here. Before we spin into the topic of the day, obviously the geopolitical tensions going on, let me just say one more time, as we got a lot of people in here already, be sure to like up the stream, guys, whether you're watching on Twitter or YouTube, and definitely follow our socials. We put out a lot of great content surrounding the stock market, keep everybody up to date on what's going on. But so yeah, we got to just jump into this whole Iran USA situation. Everything. I want to try to fully dive into like all the implications from it, different sectors, energy. I think just to start though, are you surprised? Which this question I'm asking you is an ongoing thing. I feel like I'm asking you every time something bad happens in the markets, and we just see them holding up so steadily. Like the instant buy the dip that we're seeing today, the QQQ is only down 0.1% right now. So, yeah, your thoughts on what's going on and the strength in the market overall with everything.
Well, as we saw with SPY and QQQ and option sentiment on Friday, it wasn't exactly the best kept secret that this was going to happen. So yeah, I mean, I think we're just in a volatile time in the market, and I think in this particular thing, I think similar to Venezuela, right? We never really saw like the market. I think rallied pretty much immediately after the Venezuela attack, and I think that's because it went well. In terms of any like I don't think I still think maybe maybe a few American lives or none. Like it was very low there, and I think that's kind of how a lot of people in the market, whatever, looks at war. I mean, it's not just like, lives are obviously what the headline that everyone pays attention to. But I think what makes people nervous about war is, what the effect it could have on our country, turmoil, potential, attacks. I mean, obviously, knock on wood. I think what would really disturb the markets is if anything happened, domestically here, from it. And, obviously, there was that shooting in Austin. But, something on a bit of a larger scale than that, I think would really shock the markets. I think for better or worse, for example, the Ukraine conflict really affected the markets and reflected them for a little bit because there was much more of a perception of like, Russia, Putin, maybe this breaches home, right? And I think that that's kind of the way that these things are going. And I mean, even some of the things that are happening that, like, I think Iran has made some missteps, like attacking a place like Bahrain, where, I think that turned a lot of their neighbors against them. So the war is like, it's going well. And a war going well, doesn't affect the markets as much as like a war that people are concerned is going poorly. But that's the risks. Like, something can go well and it can, turn on a dime. It's what we've seen in Iraq. And I think that's, in the longer term, what does make people nervous about this, where it's just like the more conflicts you get into, the more kind of spins of the wheel of something going bad and turning into like a resource drain or it coming back home. But yeah, I think the way that it went is certainly what's creating this stability in the markets. And then the other thing is that I do think the markets were a little weak last week, and I do think that was people positioning themselves for this already. So I think that that's the other side to this. I think people probably went into the weekend. Institutions probably went into the weekend, especially with that QQQ option sentiment going to zero, right? I think they probably felt that they were already well positioned today.
We saw a lot of defense names reacting, popping higher today. Lockheed Martin in the pre-market was up like over 20% at one point. Now it's up 3%. Palantir is up today. A lot of the drone makers are up today. But they are kind of selling off throughout the day. Would you be buying not the dip, but just like any kind of pullback in these stocks? Would you keep putting fresh capital there? Or is this kind of like, we've seen this with wars before, where it's kind of like a 1 or 2 day thing, and I feel like it never really lasts. But what are your thoughts there? Are you looking for the defense sector, the drone stocks? Would you be buying those right now?
Well, there's a drone company, DPRO, that's like going up today, and I think that kind of thing is more of what to look for. And I'll explain. Like, a company like Lockheed, it kind of has some like meme stock properties, right? And we saw it up 20% and down, right? Because like when people are like, oh, there's a war, I'll buy Lockheed Martin, right? They're not necessarily like just because there's been this conflict doesn't mean there's necessarily going to be a change in revenue for Lockheed Martin, especially if it like, and this might be the reality of it, especially if it's a shorter conflict, right? That's not going to change what people like. These missiles that are being launched are already like bought and paid for, right? And then also the orders, we don't know if there's just enough of a missile stockpile already. I don't think we're hurting for missiles, and just because we launched these, we're like, oh, now we need to up our future orders to Lockheed Martin, right? So there's the headline meme stock kind of nature of it, and then there's the reality. But I do think something like Dragonfly, DPRO, that's a different story, right? Because I think that does remind people that some of these technologies, like, I think people do make the apt comparison there where like all these missiles being launched, maybe there's a future where like more tactical drone operations are going to happen. And I do think it reminds people of that. And it probably reminds people that, if I'm thinking about why, last time I checked, it was up like 17%, right? If I'm thinking about like what that might be reminding people of, it might be that these like kind of like, as these things could become more tactical, like maybe they unfortunately become more common, right? If Venezuela and Iran turn out well, right? We could see more of this, and we could see a future where there's just like, where there's more attempts at regime change in this very tactical nature, because they kill the Ayatollah. This is kind of like something that I think Israel in particular does really well. I mean, I guess the U.S. did it well with Venezuela, and I think we saw what Claude's role in this. For not to tease another story, but I think AI and reconnaissance is making it a lot easier to just like decimate the leadership of a country, and like drones are going to make that, even easier. I mean, there could be a future where it's not like, hey, we can launch missiles wherever we want. It might be like these drones are in place in the next 10 seconds. Like they could be hovering in the air. They have the positions, they've got eyes, like in the next 10 seconds, we can eliminate, the 30 senior leaders. Like, I do think that's the unfortunate future that we're heading towards. But that's also a scary future, right? Because the more prevalent that becomes, the more that, people can do that to us. And like, you wonder, is there a future where like, leaders will never be like leaders of certain countries will never be in like the open air because it's too easy to launch a drone attack or a bio drone attack, not to scare anyone too much. But the technology that I've always been, I'm very into something called futurism, which is kind of a mix of like, being a technologist and science fiction. It's kind of like the merger of the two. But there's something that gets talked about in those spaces that's a combination of drone technology and nanotechnology and bio warfare, where you can just like fly like a microscopic like bio entity into someone and infect them with something and they die. So yeah, that's even like a scarier future than the drones. But yeah, we might see a time someday where leaders can't go in the open air anymore, and you have to have like, and the only way to stop like a bioweapons drone like that is essentially having like a very like, you cannot get into a space. Windows might not even be done, be able to do it. They might be able to sneak through a crack. So yeah, we might see a future where like the most powerful people have to be in these like ventilated situations, where an air filter can filter out these bio weapon drones. I don't think this might not be in my lifetime, but it's the directionality of where we're headed, and definitely the drone part of it. I don't think we're too far away from that.
I was just envisioning Donald Trump and the Pope Mobile going around going forward. What about the energy implications of this? We're seeing European natural gas prices up over 50% after Qatar was hit in some of these drone attacks. I'm thinking oil. Do you think there's a possibility that inflation could resurge if energy prices are, on the rise for the foreseeable future with this disruption going on? And would you be investing in any oil, natural gas stocks? Would that be a play of this situation?
I mean, we've had TPL in our portfolio for a bit now. It's, one of our better longs. Don't think we're dropping that one anytime soon. And yeah, I think, wow, really? What happened with ABAV?
Oh
Is there
my
any?
gosh, down 15% now.
What happened with it?
Let's see.
Oh, I think they might have lost this contract. Space Force reopening $1.4 billion SCAR program.
Interesting.
Wow. This market is not for the faint of heart. Crazy.
What
Crazy,
is
crazy.
is that specific to AVAV or a lot of defense companies moving down right now?
No, I mean, we already talked about it with like Lockheed Martin. I haven't. Let's check on D-Pro, which I was just talking about.
Still
That
up
took a bit of
10%.
a hit, but still looking good.
Yeah, so we'll have to keep our eyes on that. Do you think maybe that's an overreaction for AVAV, or are you just going to keep your eyes on it?
I don't know.
See how it
I mean,
develops.
I mean, I didn't own it, but let's take a look at live Prospero signals. Still at 91 net option sentiment. Where was upside's down a little? Yeah, I mean it was only 74 upside. Interesting. Yeah. Maybe what's like I'm gonna look at like the QQQ because it looks. I'm checking the stocks and yeah, the QQQ is in a bit of it. It looks to be rebounding a bit now, but it looked a lot stronger at open. It's gonna be a tough market. I think this is just another example. But yeah, to get back to your question, I do think a lot of what has been pulling inflation down has been the low energy costs. So that could, that could be something. I think. I mean, it's going to be really interesting, right? Because Powell's not going to be around much longer. So you might say that this inflation would keep rates elevated, but I don't think that's going to be the case with the change, like with the power change. So yeah, it's going to be a real interesting situation to see. What ends up happening with inflation around this energy stuff, because it could go back up, and yeah, that's gonna be a difficult situation because Trump has really emphasized the inflation win, so it's going to be a hard balance, right? He wants rates lower, but obviously that if we're already getting some inflationary things and then you lower rates, it's going to be a hard balance.
Does the shifting tides of like the oil market, does that even boost the nuclear sector even more and make it even more important to get that like up and running and get some energy going out of that? Or does the uncertainty of it all actually delay the nuclear stuff because now you got to focus on other matters?
The way I view nuclear right now and like why LEU, I mean, I think it was down to start the day, but is now up. Like the way I view that sector is like I'm holding it because it's going to be very headline driven. That's how I view nuclear right now. I think it's overall bullish, but you never know when the next announcement, the next pocket of money, and I think the thing about nuclear too is anytime one nuclear company gets a good headline, it seems to raise the entire ecosystem the same day, right? So you really almost have to hold that nuclear name on the hopes of a headline for any of it.
JC just said long entrance ramp for nuclear. I feel like I agree. Like it seems like I don't know why it takes like multiple years to get like this stuff going, but it seems like everything they say is like 2030. It's like multiple years down the line. I guess just because it's such a serious, business, you got to take every step the right way.
But that's why I like LEU. Remember, I don't know if anyone remember the newsletter where we analyzed the different businesses. LEU, because it's a uranium enrichment company. I mean, that's why people like the miners as well, right? You don't have to wait for revenue on those. That's why I never like the SMR plays, right? Because the SMR plays are longer tail risk, right? You're basically risking that those businesses aren't the winners, or there isn't as much upside, or they don't develop as fast as people say. There's a lot of risks that don't exist on the uranium enrichment side, on the mining side, right? Because both of those are preparing for the ramp up, for the demand for 2030 or whatever. And just because it gets delayed doesn't mean there isn't going to be a continued demand for, mining uranium, for enriching uranium. I think that's something that people will always be interested in it, even if it's just like because it's a limited resource, even if it's just like, to stockpile it, to create forward contracts. I'm sure the US government, if there was international demand, they might want to just purchase it, just to make sure it's not going international and it's the US that owns the stockpile.
Last follow-up on this topic. We saw gold and silver, similar to Lockheed Martin, up bigly as the pre-market, and now they're selling off here. And Bitcoin, the opposite. It was down over the weekend and now up almost 4% today. Which would you, at this point, at this stage, with how much like gold and silver have rallied, how much Bitcoin has dropped, which of the three is most interesting to you? And is it also possible Bitcoin has hit a low of this pullback now that we've seen it kind of trending sideways and there's a lot going on and it's still not pulling back and up today? Are you gaining more confidence that a low could be in for it?
Yeah, I mean, it's really hard with Bitcoin because it does seem like when the market is treading water or even, turning slightly bullish, this feels like a low. But if the market takes another dip, Bitcoin is never immune from these big down days. We used to see that be more of the case where it could operate a little independently, have its own demand, but it's so tied to market leverage now, I think, in the way people think about risk assets, that it's just like, I have no doubt, like, just as an apples to apple like comparison, like NVIDIA would not have to hit anywhere close to its all-time low, or the QQQ would obviously not, or recent low, 52-week low, you might even say, for Bitcoin to go past its 52-week low. Said differently, downtrends in the market are going to make Bitcoin find new lows without other assets finding new lows. And I think that's the risk in it right now. There's a lot of risk in the market. And like I'm saying, like NVIDIA, like if there was a domestic terror attack in the US, like NVIDIA could take a 20-30% hit. And I'm choosing NVIDIA as like the most stable tech company proxy, right? I could see Bitcoin, going to 40K, 30K on that. Hold on.
That would be crazy. Bitcoin sub 40,000. I see Bud's comment too. We'll get to that, Bud.
SOLS. Do we have that in, or are you requesting a ticker ad?
We do not have them. I checked already.
Okay, we'll check it. We'll look at adding it.
So, Bud, if you're not in the Discord yet, it's linked in our YouTube description, so you could join. And there's a room in there for ticker additions. But since you said it here, you're good. But going forward, you should join the Discord. A lot of great investors in there too. Good convos going on. I think we can move on from crypto and our whole opening segment. Hopefully we covered it in detail enough for everybody. I want to bring up Anthropic, because George, it's another thing that you were just ahead of the curve on. I feel like you started talking about them on the streams when nobody was, and now they're the #1 downloaded app in the App Store over the weekend because of the headlines and coverage they've been getting for their little tiff with the U.S. government, a pretty big person to have a little bit of a dispute with, but they were actually designated as a supply chain risk now and have lost their government contracts, even though I think there's like a 90-day window or something, or maybe even longer, where the government is still going to be using their tech as they're like off-ramping. So they were used in this whole Iran situation. But yeah, just want to hear your thoughts on Claude, Anthropic, what's going on there, and now that their app is getting tons of attention.
That isn't that kind of like the ultimate admission that that their tech is better. Like, we don't like them. We don't want to work with them anymore. But we need 90 days to figure out how to do the same stuff that we're doing. Like, it's just become better. And like when I talk to people, like people probably know me well enough now to know that I really hate groupthink. And I'm in these AI conversations sometimes, and everybody's just like, oh, blah blah blah, models are going to converge, they're all going to be the same, like, and like, yeah, that's a possibility, right? But people talk about like, and you probably heard me use this phrase like dominant probability before, and it's probably the most likely scenario, right? That they do converge, that everything gets to be the same. But like some people, when they hear this enough times and they hear smart people say that, as if it's like, people love to talk in binaries, not probabilities. And the reality of the situation is you can't look at this Anthropic situation. And the more that I learn about it, the more interesting it gets. And you know, obviously for those we've been talking about a lot lately, but like seven of the best engineers left OpenAI to start Anthropic. And if you think about it, they operated at a fraction of the resources and yet somehow passed, a lot of this technology. Even Google, that's integrated DeepMind, which everybody knows, I think is the best AI technology out there in terms of the brain. Like, I think people, most people agree that Claude's better than Gemini now too, right? So it's one thing to say that, like, yeah, this thing could all converge, but you also can't ignore the fact that this, like, the acceleration of the technology of Anthropic and kind of what we talked about last time, like, and this is kind of a segue to the ethics, like, you can never ignore, like, especially in today's world, how much like talented engineers care about ethics now, especially when, the godfather of AI is saying things like, we're past the point of return. We need to change things, like, engineers especially have very different, especially talented ones, have very different recruiting cycles. I was actually talking to someone yesterday who runs a big marketing firm, who was like, the general rule is that when you make IP on a company computer, like, it owns it. The company owns it. Even if you created something totally original, your own thought, has nothing to do with your job, if you do it on a company computer, the company owns it. There's very clear software laws around that. For those of you that don't know that, good thing to know. Anything. If you type up a business plan or whatever on a company computer, they own it. So an extension of that is, I was talking to him, he's like, but actually some of our more talented engineers, we negotiate deals with them where if they're building something for a client that's more custom, we let them, own a piece of that in a different way. I talk about all the time how, like, for a long time, Goldman Sachs was trying to recruit. I think it's still true. I haven't checked in, so I don't know if this is still a fact. But they're like talented technologists had their own floor, which had its own hours, its own dress code, because they didn't want people seeing that there was a different life for these engineers, right? And this is all to say, talented engineers, programmers, they care much more about things like ethics, quality of life, because everyone's going to try to be making them, huge monetary offers. Like, it all looks the same at a certain point, because that talent is limitless demand. So that's the thing that, like, when you get a headline like this, where Anthropic, and by the way, like, I think it's really funny that everybody's like making it seem like, and of course the US government, they love to do this, making it seem like Anthropic's being like so difficult, but you can see a good video where Dario is like, we're good with like 99% of the applications that they ask us for. We only don't want to do two things, like mass surveillance and fully autonomous drones that can kill with their own discretion, right? Those seem like pretty, like, I don't know why anyone, like, there's just like, I get that we're in tribes and there's some people that they hear their tribe and they're just like angry at whatever, but it's just like, to me, I don't care what, what politician you like or whatever. Those seem like very reasonable things to not want to do as an AI company, especially the second one, because it's not even about like, oh, do they kill someone they're not supposed to? It's more like, if you make enough of these things, right? We already have covered the story where like agents exchange information that they're not supposed to, break their permissions, like cross those lines. Like, you don't know if we've just like, you make enough of these autonomous drones and we've basically handed over the machines the tools that they need to actually subjugate us, right? It's not even a question of like, oh, did we like, did we kill, a woman, a child? We do that anyway with bombs, right? Like, it's just like, yeah, I don't want those people killed, but it's not like we particularly care about that now. That's the risk that I'm particularly concerned about in that second one, that we basically like, right now, machines might be smarter than us. They might be caged, but they don't really have a means. They don't really have a means to take over, to completely subjugate us. Like, they could do things like turn off our power grid, but we could still be like, okay, whatever. We're not, bowing down to you, but like, we'd probably do a lot of killing each other. But yeah, that second one makes me pretty nervous. But back to the recruiting, back to the culture thing, right? I don't know if Anthropic's doing this because they have a real moral backbone, or they just understand marketing and comms, right? Probably both. But yeah, I think people look at that, and in this world of like, yeah, OpenAI being like the second Anthropic's like, yeah, we're not going to do that. That's like too scary. OpenAI, the day later, is like, we'll do it. Like, no questions asked, right? I think it's really refreshing, and it creates a lot of loyalty. And I think, it's probably more that than me mentioning Claude, that the download numbers are at the top, because people do, like, as much as people compromise on morals, I think a lot of that is like lack of a better choice, where we're just exhausted, where we're just like, okay, we're picking between like, like the giant douche or the turd sandwich, as South Park popularized. And you make that choice enough times and you kind of become desensitized to it. But, a lot of people, I do think, if you give them a choice of a moral company and, one that isn't, I think this is scary times for OpenAI. And I even think that this is a sign that, for a while, think of where OpenAI started and where they are now, right? They started being like, oh, we're a nonprofit. Like I actually, it caught my attention when they were like, we're building AI for humanity. That's how their branding started. That's how they, attracted all these engineers. And now, like, slowly they've devolved, right, into like, oh, we're building AI for the good of humanity, to some other company. Some of our engineers that actually like formed some of our technology left because we were too immoral. They turned down this contract, and now we're good helping to build killer robots, right?
Another interesting point that I'm curious about your opinion is like, so the U.S. government deems them a supply chain risk. Like, I guess that's an intent to like crush them as a company, and then they become the strongest they've ever been with the most downloads ever. So who is in charge, and like, will the U.S. government maybe retaliate more against them, seeing that it kind of just boosted their business?
Yeah. I mean, it's it's what we talk. It's doing the moral thing can also help your business. That's Prospero's long-term bet, right? And like, we're not a moral company because we think it will get us business long term. We are a moral company because we think this industry is devoid of morals, and it needs to be there, and we think that will work out for us in the long term. And those are two very different things, and those are two different value sets. And like, I don't know the leaders of Anthropic well enough to say like, is this a marketing strategy, or how well they believe this? But this is one of the reasons, we do these live streams, and we try to be, very transparent, like we were in the newsletter this week, where we share our successes and our failures, and we're very open about everything that we're doing in our development, right? Because there will, there will come a day where like we do reach a scale. There is word of mouth about us when we start spreading products like ETFs or whatever. And we do think a differentiator of ours now and always will be the fact that, we care about making products that help people. And I think that will be, we will see that more and more, whether or not it's for marketing. Like, I do think like this is something that I've obviously bet on for many years. And I do think this is a really good signpost in that, people do care about this. And if you give them an alternative, if you give people the choice between a product with moral standards and one without, I do think they will pick the one with moral standards.
You're speaking my language now. You're speaking putting good energy into the world, basically positive karma.
Yeah.
Max aura, as the kids say nowadays.
Yeah. I don't think we're going to have any of our crystals on this anytime soon, but I don't think we go that far here, but yeah.
I wanted to highlight the Nvidia earnings and how they gapped up and then instantly sold off, being that they've been so strong in the markets for years now. And then also spanning that to this whole semiconductor space. Obviously, AMD has been a short of ours recently, looked terrible in our signals. It seems like the excitement for this whole sector is kind of waning as it has done so well in the past couple of years. I'm wondering your thoughts on it. Like, are we going to see a semiconductor pullback? Is that why the market has been so strong? Is the semiconductors really the nucleus of like this market now? And yeah, just your thoughts on that overall space, the cyclical nature of it too.
Yeah, I think when we have and we've been talking about this for, I think since the end of last year, like we're going to be in a volatile market. Like we just I don't think there's enough positive catalysts. And we're seeing this, even good earnings reactions that buoy the market, like Nvidia, like it doesn't last, right? Like before, like on the way up, it's like, maybe there's, maybe there's there was like a couple down days and then another big parabolic thing, but we're not really doing that anymore. It's more like this. And I think that's just because like, whether you're looking at technical analysis or whether you're just understanding the totality of catalysts in the market, I don't think there seems to be a sufficient catalyst to carry the market much past the all-time highs, right? On the other side, we do seem to see some support, right? We've seen it bounce off. I don't recall the level, but we can probably look at a chart pretty quickly. We've seen it at least twice bounce off. Let's look at the QQQ. Yeah, about 3 times now, right? We saw it bounce off 594.76. We saw it bounce off 593.34. And then there was another one, 597.99, right? So you might even say we're looking at higher lows. So yeah, I think we're kind of seeing a market that's got its upper bound and lower bound for now. And I just think that I don't know what it would take. It might be until shortly before or when there's a Fed chair change. Like that's the next positive bull catalyst that I see. And then, in terms of bear, there's just more, which is what made me nervous. Sorry, I don't know what I pressed through myself from the stage. Here's the bear catalyst that I see. I see, any kind of thing happening domestically here from these wars, instability from these regime changes, ongoing instability from these regime changes, inflation. I think you probably a bad inflation reading from, which we could see as early as next month, from this, oil price rise. I think that, we're looking at kind of one, positive catalyst, right? If anyone in the audience has any other ones to call out, but we've seen some good earnings, right? We've seen some good earnings. We've seen mixed, but the good earnings are not just, they're not carrying the market. They're not carrying the stocks the way they have. So yeah, I mean, I think that's, that's kind of what I'm looking at right now.
So if it is until May, which I think is when the Fed chair switchover happens, when the market gets its footing again, maybe a little bullish momentum back. Sam is asking, is there another sector that could be the leader for the market, or semiconductors even in the future? Tim
I
said
think
robotics.
robotics. I think robotics is a good answer. I think nuclear. We talk about nuclear. I think robotics has more upside, but also, I think more downside risk if it's a bear market, right? Because these are, we're priced a little aggressively in terms of earnings, and we always talk about, that, as the market gets more depressed, there's the companies with like longer tails on their earnings multiples are going to get hit harder. But I think robotics is definitely a good answer. And then I even think a company that is doing well today that we added. It was a recent trade alert. GLW, Corning, I believe. That's a weird ticker for a company called Corning. I think infrastructure. They provide like optical infrastructure for cables. Like I think I like those companies more because people are realizing that you get these orders, right? And the hyperscalers go up on these orders, right? But as the orders are being built, these people that are building components of the infrastructure, then you start to see they're down the chain, right? So I think GLW is a good one. I think another good play for that is a packaging company. I think it's called Amcor. That's actually looking pretty good. Went 68 open. Let's look at the chart on that. That's one I've had my eye on for a while. 88 net option sentiment right now. Yeah, looking at the chart might be a good time. If you look at the weekly chart, it really does look like it bottoms out close to where it is. But that's another one I really like, AMKR. And that's like, if you want the one that can go most parabolic, if that's what you're getting at, then robotics is your answer. If you want the best mix of risk reward, I like those physical semiconductor infrastructure plays. If you want something in between those two things, I think it's nuclear.
Sounds like the picks and shovels type of a trade. But speaking of orders, I wanted to bring up one stock that was touting its backlog, which was CoreWeave, and revenue that they have based on a backlog of 67 billion. And they said they expect to convert on 40% of it within the next 2 years and 80% within the next 4. But I feel like that's the type of, it's not even trading off its earnings multiple, it's trading off its, expected possible revenue multiple. So what do you think of CoreWeave at this point and that large number, being that they weren't even a public company just a few years ago and now 67 billion backlog?
Well, the thing about that is we saw the first chink in that armor when OpenAI said that they actually expected to reduce their compute spending, right? Those are just still orders, right? And an order for like a physical product that's going to be delivered in 90 days is very different than a data center. I don't know how much of that, and that's actually a good question. Let's throw that into GPT. What percent of CoreWeave's 67 is from data centers already built versus in construction, right? That's a good question. GPT is thinking about this longer than it normally does. Maybe we'll come back to it.
Sam put the ticker RMBS in the chat. Does that apply to your picks and shovels type play?
Yeah. Okay. So this is something that ChatGPT. Here, I'll share my little screen here. So I just had to show this. There's no public disclosure that breaks down already built. Backlog depends on CoreWeave bringing data centers online on time. So yeah, that's what I'm talking about. Yeah, so that backlog is about 25 to 30% active, right? So think about the unknowns there, right? First, they actually have to get the tech online, right? Then they have to, then the orders still have to be there after it. So, like, that's why I think people aren't necessarily like respecting that as much, right? Because we don't know if all of this demand can get built out. There's a lot of people building it right now. Like, there's unknowns about the power grid. Although, like Iron, I don't know, probably an interesting question. Iron makes a big deal about their power already being there. When I didn't listen to the CoreWeave conference call, I don't know if it's the same thing with them. But I do think that, especially if we start to see, Michael Burry's like Chip Mageddon thing happen, where you have to depreciate the older assets. That does really help new builds. But if the people that already own the existing tech have to take hits, that's definitely going to hurt, the R&D orders, right? Because when you care about earnings per share, if you have to take a depreciation hit, that hits your earnings. So how are you going to balance that out to like not have a huge drop off in earnings? You're going to lower your R&D spend. So your R&D spend, your just compute spend, like a lot of those things. So that's R&D is going to hurt forward orders, right? And then, actual compute spend is going to hurt, maybe the current capacity that gets used, and maybe not all of CoreWeave's or Iron's or whoever's capacity is getting used if some of these budgets get cut. So I think that's where people are starting to be a little more cautious, but that's why I like the build infrastructure plays, right? Because the contracts are there. These things are going to get built, whether or not there's enough power to power them, whether or not there's going to be demand waiting for them on the other end. That's why I really like these infrastructure build players more now. I know that RMBS looks good in our signals, but I'm not actually that familiar with what the business does or has looked good in our signals. Let me get a refresh.
RMBS, provision of cutting-edge semiconductor and internet protocol products, memory and interfaces to security.
Yeah, I mean, memory is more of like it's like a more of the same kind of thing. Like I think those are different. Like I do like the memory plays, but I like the infrastructure build plays. Like I said, Amcor, like about, packaging, the packaging is needed regardless of what happens. Like chip demand is part of this. Like chip demand could get hurt from this, depreciation thing. It could change the way people price out or pay for those chips. But like something like optical cables, like those aren't at a high price point to begin with, relative to like the chips and the demand. Like some of what these companies are doing is more of just like they're there, they have some advantage to the technology. That's what people like about Corning, and people are just going to order it just because it's needed for the actual like infrastructure. But like part of how like something like, SanDisk RBS, which by the way has a 29 net option set to it now, part of how it's priced right now is this overcapacity demand thing. So even just a change in taste could really change how people, like, even just like a change in depreciation could change how people look at that.
Tim was commenting about biotech and health, and I feel like that's a super interesting aspect of it. I would imagine that there have to be some crazy innovations, discoveries, like Tim was saying, using AI. But I wonder if it goes back to the same problem where you were talking about, like, you don't know who actually is going to be the winner of that. It's, yeah.
Biotech is one of the hardest things to analyze, predict. The downsides and the upsides are just so great. That's why I tend not to go too close to it, because it can really make or ruin your portfolio. Just that one name, even if it's like 5 or 10%, right? You could see an 80 or 90% change. And like, I don't mind higher risk companies, right? But I like higher risk companies. I understand the business more, right? Like, and we talk about this all the time. You play to your strengths. I'm sure there's some people in the medical field that could look at like where something is in clinical trials and understand that data better than I do, right? But something that's in like phase 1, phase 2 clinical trials that's going to do extremely well if it reaches the next phase, like, I'm not necessarily that good at looking at that data and understanding that. The reason we did ABVX, I believe is a ticker, is that because that wasn't just, and I've talked about this a lot in the past, like sometimes there needs to be multiple prongs to a risk thesis, right? We were looking at, yes, there was some potentially good clinical 3-phase information coming, but there was also a potential acquisition with a lot of like, smoke to it. And to me, I like that for 2 reasons. I like that because not only is that acquisition like a second potential catalyst, but the fact that someone like Eli Lilly was circling at it like that gave me greater confidence that maybe they know something about the clinical trials, the phase 3 trial that I don't. So that was a validation. That was an external validation point. That was interesting. So that's the kind of thing that would make me comfortable. But overall, it's just very hard to analyze, very hard to odds make. And it's, it makes it harder for me to get on board.
Moving on to NW's comment, asking about timber companies based in the US. The admin has amendments for federally held forest usage, including increased economic opportunities. Any interest there?
I just don't like business, like businesses like timber businesses are so low margin, right? And they're also like, we get a lot, like, this is a story because we get a lot of timber from Canada. And obviously, like, some of that is, some of the things have changed on that, right? But you're basically betting on a low margin business like timber ramping up. But then, similar to how we're talking about biotech, we're like one better trade agreement with Canada from that business being like completely decimated again, right? And you're talking about infrastructure being built to capitalize it. It's kind of a long tail, so there's a kind of a lot of time before that can happen. It could be a play where it's just a momentum play, right? It still wouldn't be what I like because of that, possibility of the negative headline. Who knows? Like, a lot of the people that I talk to on tariffs, even like the staunch supporters of it, most of them will say they don't understand the Canada thing, right? Like, Canada does not make, there is definitely, and we've talked about this, there's definitely an argument that we have to do something to reset the trade relationship with China, some other countries with Asia. I mean, I think even if you don't agree with the way that it was done, most intelligent people can acknowledge that, we were on a bad path there. But I think Canada is kind of the complete opposite, right? I think most people will say that we weren't on a bad path with Canada. And that, one of the Scott Galloway probably put it the best that I've ever heard anyone put it, where it's just like Canada has things like lumber, which like it's importing into that we're importing that generally trades at like a 1.2 earnings multiple. And our exports to Canada are like manufactured goods, specialty items that tend to have like a 10x like earnings multiple. So in terms of company value, we are getting a lot more from Canada than they're getting from us. So it was a really weird fight to pick. Like I said, even people that are highly supportive of a tariff policy overall don't really understand why we've picked this fight with Canada, which is all the more reason to say that, like, maybe there is a deal to be made, right? And maybe all this is just in the service of getting that deal. And this like, hey, we're going to make our own, like, we're going to get our own timber thing is just a negotiating tactic where there's going to be a rug pull.
So I have two more topics for you. I don't know how much time you got today. We're about the hour and 10 minute mark, but all right. The next one is very interesting. Curious on your thoughts because Block, XYZ, Square, whatever you want to call them, Jack Dorsey's company, went up on their earnings over 20%, mainly off of the news that they were firing about half their company, just under half their company, going from over 10,000 employees to about 6,000. Now, we have covered the SaaS apocalypse a little bit. A lot of these tech, software, digital companies are going through very bad periods. Does this reaction to that story of him cutting so many employees, and he gave the direct reason for the way they're implementing AI in their business, does it give all these other SaaS companies the free pass to also do similar things? And could we see this unemployment from AI really start ramping here? Especially as the stocks are getting pressured, so maybe they'll be forced to. But yeah, what are your thoughts?
Yeah, I mean, how long have we been talking about this, right? You make these investments, you're going to have to show ROI. And we're getting to that day, right? And yeah, it's kind of, I think to your point about headlines, it's very correct, where it's just like at a certain point, you make it comfortable for these companies to do their layoffs. Just because they're like, oh, like, well, not only are they like, and you don't see this, you don't really see Block getting hammered for this, right? Like, not only are they not getting hammered, that might make people feel safe. Their stock is going up, right? So there's actually incentive to say, like, hey, actually, if we start cutting these jobs, it might be a benefit to our stock, when maybe some of what some companies are scared of is that it's a bad headline for them and their stock goes down. So yeah, I agree. It's kind of a dangerous precedent here.
Now, I'm not super familiar with like the fact that Block can cut almost literally half their employees overnight and still function as a company. Is that typical? Like, have we seen that in the past? Or if we start seeing that through a lot of these companies, or is this like an outside of the normal situation, and we're not going to see companies literally make that drastic of a change, like in like one round of cutting?
I mean, I think some of it might be for the headline, right? Like, I think if you think about like, those headlines about like Elon Musk and X and all the people, yeah, like I think we have a few of those comments. I think the overhiring is definitely a real thing. But I also think that it's like in the similar way to Musk did with X. I think some of it was just like, we'll figure it out, right? Maybe we're not covering all these functions, but we're going to figure out what holes are created, and we will automate those holes with AI. So I think it's just a question of like how much money you have, like what the risks are to you, right? For a company with more money than Block, like let's just pick on Meta because they're spending so much on AI, right? Like Meta has so much like earnings, revenue, cash, like you name it. Like that would be really dumb for them to be like, let's find out what holes this creates, right? When you have so much capital, like that's not a good attitude, right? You'd rather, slowly reduce workforce, make sure you're not missing any holes, and like slowly replace with AI. That's what a company with more resources, that's a smart thing to do. But we could see other small entities because that's the difference, right? When you cut 50%, like I promise you, you don't know you have all of them covered the day you make the move. But you're willing to find out. And you're willing to like, I'm sure like all the critical payment systems, like they knew they could keep online, right? I don't think they're dumb, right? But if you're thinking about like, some report that the like executives are used to seeing, right? And there's someone that generates that report, or there's someone that's like a go-between or whatever, or run some meeting that they typically do, and maybe the meeting's gone, and there's some like, there's some loss of efficiency because certain teams aren't communicating, right? That's what I'm talking about. And yeah, organizations can figure out how to cut the fat on that, how to replace, some of these reports or communication things with AI. And I think that's probably what Jack Dorsey is ready to do. Other than, and I think what, JC and Tim mentioned too is also true, right? He might just be like, I don't really even know what all these people are doing. So let's find out. Maybe 30% of them are doing non-critical things, like 30% of the 50, and we're just going to find that out immediately. But I think that's the attitude. It's not like there won't be losses of efficiency because of it. I think it's just acceptable losses for getting this headline that might work out well. Good CEOs understand how to make these calculations, right? Like he's like, okay, 20% up for our stock. Maybe our company is 20% less efficient, but maybe that 20% lowering efficient only has like, a minimal impact to decreasing earnings, but the workforce reduction, like it's always said this forecasted too, right? So like just a perfect example, you still have to pay these salaries, right? So maybe this quarter you have a bit lower earnings because of the efficiency reduction or whatever. Like maybe you do, maybe it's 5% lower than estimates now, right? But when you announce your forecast for next year with the workforce reduction, profits are way up, right? That's going to be a banner earnings. That's what people are reacting to right now. So is that fully priced in yet? Probably not. Because, maybe they don't know exactly how much to forecast up earnings, everything like that. But it is always an interesting thing to look at. And there's always like, this is where like value investing shines. Or just someone that knows how to build really good models, right? The stock goes up 20%. Like, I have no idea whether to tell you, like, how much juice is left in these forecasts, like when they report. But someone that knows the company very well, knows their spend, can dig into the kind of workforce reductions that they made. They could probably do a very good forecast of like how well their earnings are going to be adjusted for this and figure out a good, price target around that they're pricing in today. And like good analysts will share this with us, in the next week, they'll share their models. But what we always say is the problem with analysts is, they could be good. They could have some kind of agenda. They could be giving better numbers to someone else. You never know.
So I have one more topic to ask you about today. And I think I was thinking about this with the Berkshire earnings this weekend. We were talking about Buffett a lot recently. The question is, when is the prime age for investing? So I feel like all of the like most respected and people who are looked up to on Wall Street. You have the Ray Dalios, Steve Cohen, Druckenmiller, Buffett. It seems like the age where people reach their peak in their ability of investing is older than a lot of other, sports, for example, chess, a lot of other endeavors in life where people are like in their prime are a lot younger. And I'm wondering, what age do you think, or like decade of age, do you think you are in your prime in the stock market, in investing? And is there any kind of like interesting thing we can point to of like why it seems like it's a lot older than a lot of other things in life?
Yeah, like definitely. I think the only debate is like 40s or 50s, right? Because the thing is like there's components to it, right? There's like mental acuity, and like that's like you're peaking in like your late 20s, right? But for investing, like some of it is just like seeing as many, the experience of seeing situations over and over again, seeing them repeat, honing your process. Um like like we always say. But the other thing is like, and what we always talk about with Buffett is the respect, the connections, right? Your sources. Like that's a thing that like there's a lot of relationships I develop with people I respect that help me, find opportunities, bounce ideas off of. So I think, yeah, that's super important. And we always talk about with Buffett, especially in investing, I hope to, be here at one point of scale in Prospero where you can call up a CEO and they're going to take your advice, right? Like that's the thing that Buffett does, where it's just like, if you have that kind of relationship with the CEO, you not only can you validate your thesis a little more, be like, okay, they're going to do this, what I believe is going to happen is going to happen. You can also like you can understand what they're doing better, you can develop a trust, and that's a big thing for someone investing, if you're going to write a large check or if you're just going to like recommend a stock to a big group of users. But yeah, hopefully I'm in my prime right now.
Just starting, just getting there. I got a while to go. Although based on your timeline, late 20s, I guess I'm in my peak mental acuity right now.
Yeah,
it's only
there you
it's
go.
only downhill soon for me in that regard. We can, I guess, pause for any last minute questions. That was a great stream. We went over a lot. A lot of ground was covered today. Wednesday, 3 p.m. We're still on for normal streams this week, so that will be the next one, everybody, if you're just tuning in today. One last look at the market. Let's see, has it moved much? The QQQ is in the green, George. So is the SPY, so is the Russell.
Shrugging off the war.
The resilient market continues.
Has AVAV come back? Let's take a look. No. Decimated.
Interesting. So what'd you say, they lost a contract?
They're revisiting a $1.4 billion, the SCAR program. I don't even know what their role in that was. Largest program. Yeah.
Well, it'll be interesting how the stock moves over the next couple days.
Looks a bit scarred right now.
I mean, crazy day in the market. All right, we got no more questions. We just got to thank you from Tim in the chat. You are welcome, Tim. Appreciate everybody tuning in. George, thanks for joining in on the road. We will see you again Wednesday. Have a great day. Bye, everybody. Talk to you on Wednesday.